Welcome back. The news in full. Egypt's stock market indices collectively slide in the trading session on Monday after high rate of profit-making sales by foreign and investment funds. So the benchmark EGX 30 index slightly by 0.59% to close to 30,650.04 points. The EGX 70 index for small and medium businesses also lost 0.4% to close at 122.87 points. And the broader AGX 100 index also slid by 0.15% to close at 11,320 points. So the market capitalization lost about £4 billion to close to £2,223 billion amid transactions of about £4.4 billion. Global stock markets rose. The dollar slid Monday as investors steeled themselves for a coin toss, U.S. presidential election and interest rate decision, and the expected Chinese stimulus measures. In USA, Wall Street stocks declined early at the start of a busy U.S. news week that features a Federal Reserve meeting election day. The Dow Jones Industrial Average was down by 0.4%. The broad-based Standard & Poor's 500 also dipped 0.1%, and the tech-rich Nasdaq Composite Index dropped 0.4%. In Europe, major European markets gained, tracking a positive lead from the Wall Street ahead of the weekend. In Asia, Chinese Shanghai gained 1.2%, and the Hong Kong's Hang Seng also gained 0.3%, while Tokyo's Nikkei 225 was closed for a holiday. The OPEC's Secretary General Haytham Abu Ghais said that an energy industry event in Abu Dhabi on Monday that the Organization of the Petroleum Exporting Countries is very positive on global demand for oil in both the short and long term, although there are some challenges, but the picture is not as negative as some make it sound. More details follow in the report.
As global prices stay volatile and world politics remain uncertain ahead of the U.S. presidential election, the Secretary General of the Organization of Petroleum Exporting Countries, Haytham El-Ghais, said the group is very positive on demand for oil in both the short and long term. El-Ghais pointed to some challenges in the global oil market, but he said that the picture is not as negative as some make it sound, adding that so-called peak demand would not happen while the global economy continues to grow. El-Ghais confirmed that the oil producer group was upbeat on the global economy, noting growth in the U.S. and in China, adding that 5% growth is still very good for a country of China's size, even if it's achieved up to 10% in previous years. He also reiterated his view that demand will not peak anytime soon, saying that it reminds him of all the talk on peak supply many years ago as the world keeps growing. OPEC expects demand to keep growing for a longer period than forecast by the likes of the International Energy Agency, which expects oil to peak this decade.
And moving to China, where Chinese lawmakers reviewed a cabinet bill that would raise the ceilings on local government debt to replace existing hidden debt, as the Standing Committee of the China's top legislator stated their meeting on Monday. The bill is a closely watched topic on the agenda of Monday to Friday meeting to the Standing Committee of the National People's Congress, as the heavy burden of the local government debt has weighed on investments and economic growth. Chinese state media said that lawmakers reviewed the proposal by the State Council on raising local government debt limits to replace their existing hidden debt. The Chinese economy, meanwhile, has lost steam since the second quarter as a prolonged property market downturn and the ballooning local government debt dented growth momentum. And moving to Pakistan, where Pakistan's central bank announced in an official statement that it cut its key policy rate by 250 basis points to 15% on Monday, for a fourth straight reduction since June, as the country keeps up efforts to revive a sluggish economy with inflation easing. Most respondents in a poll last week expected a cut of 200 BPS after inflation moved down sharply from a multi-decade high of nearly 40% in May 2023, saying reductions were needed to bolster growth. The Pakistani Statistics Bureau said average consumer price index inflation in the South Asian country is 8.7% in the current financial year, but the International Monetary Fund expects inflation to average 9.5% for the year ending June. However, some analysts say inflation could pick up again in 2025, driven by electricity and gas price increases after a new $7 billion IMF bailout and the potential impact of taxes on the retail. Moving to UK, after UK bonds stabilized on Monday, the sterling pound regained some of its losses to stand at 1.2982, and this is essential before the Central Bank of England meets on Thursday, as it is expected to cut by 25 basis points and change its fiscal policy. More details follow.
The British pound bounced against a tepid dollar on Monday ahead of high-stakes events this week that include U.S. elections and a Bank of England interest rate decision. Sterling rose 0.4% to $1.297, coming off of its longest string of weekly losses in nearly 6 years, and against the euro, sterling dipped slightly to 84.05 pence. It fell to a 2.5-month low of $1.284 last week as British Finance Minister Russia Ravid's high tax, high spend and high borrowing budget plan sparked political and monetary uncertainty. Alongside the budget, the Office for Budget Responsibility trimmed its growth forecasts beyond 2025 and forecast UK inflation will average 2.6% in 2025, up from a previous forecast of 1.5% back in March, prompting traders to pare back their BOE rate cut bets. In an action-packed week, attention will be on both the U.S. Federal Reserve and the BOE policy meetings. Both central banks are widely expected to deliver a quarter-point rate cut on Thursday, respectively, with the possibility of another similar move in December. Investors will pay particular attention to comments from BOE Governor Andrew Bailey to see if he offers any view on the government spending plan. Generally, a gauge of expected volatility over the next week in sterling jumped as investors brace for the highly uncertain U.S. elections, which could lead to big changes in global trade policy and swings in the dollar.